Well, the first thing to say here is that most people should ensure they have a balance between these asset classes, and your investing time frame also needs to be taken into account. That said, it's pretty obvious that holding cash is not going to get you much of a return, even if interest rates do rise later in the year. The income available from bonds has also fallen, but corporate bonds are more likely to hold up better than the bonds issued by governments. But if inflation really takes off, the return from nearly all types of bond are likely to suffer. Well, equities are very suitable for many income seekers. Dividends from equities are more likely to keep pace with inflation than either cash or bonds. But with the top 7 companies in the FTSE 100 index accounting for nearly half the index's dividend yield, there's a lot to be said for casting the net further afield. Europe, for example, boasts numerous large companies with solid dividend records. And if you have a time horizon of at least 5 years, then shares really should be included in your ISA portfolio, either via funds and trusts or individual shares. Well, many people are happy to invest in individual companies in their ISA, even those seeking an income. And let me give you 2 examples of why dividends are so important. Take Vodafone. The shares are up 37% over 5 years, but with net dividends included in the return, investors have got back 62%. Now, a steady stream of dividends can also help maintain the total return available from shares. Take GlaxoSmithKline. Its shares have fallen by 16% in the 5 years to end 2010, but if you add in the dividends paid, investors have seen a small 5% gain overall. These are examples of how most equity income funds and investment trusts are able to keep raising their own dividends even if stock markets are falling. Well, other routes to find income can be through multi-asset funds that cater for income seekers who are not sure whether to invest in cash, bonds or equities. For example, JP Morgan's multi-asset income fund yields between 5 and 7%. And as the fund has a global remit, it can invest in anything from blue chip shares like Vodafone to bonds issued by the government of Venezuela.